Hello everyone, welcome back to another episode of Weekly Options. My name is Artie and I'm one of the moderators at our community Bear Bull Traders. Wow, what a week. Lots of economic data came out today. We're recording this on Friday, April 1st. We just finished Q1. I hope all of you had an amazing first quarter. The data that came out, we're going to look at the data and see what type of trading plan we can set up based on the economic data that just came out today. So economy is very strong. So the job numbers came out, and as you can see, we added 431,000 new jobs, which is pretty amazing, above the estimate. And the unemployment number is now sitting at 3.6%, the lowest it's been since the pandemic has started. So pretty amazing, pretty strong economy. But is it all good news? Is it all amazing? No, since we are a more sophisticated traders, we look behind the curtain. So let's actually go ahead and see what's happening. Well, while the economy has been really strong and the job numbers came out really good, the participation rate is still lacking from the pre-pandemic level, meaning more and more people are not willing to go back to work. So take a look at this chart over here. So yes, unemployment is at 3.6, but participation rate is not still at the historic 65% level. It's below that. Now there's a lot of reasons for that. One of them is really amazing unemployment benefit. That could be one of the reasons people are not looking for work. Another one could be a lot of people retiring a little too early because of the stock market boom, because of the Bitcoin boom. And another reason could be people are still worried about the pandemic and are not feeling safe. Either way, you have to always look at participation rate before making any trading decisions, right? So it all work in tangent together. Let's go ahead and see what else we got. We also got, today was a big day in terms of economic data. We also got the ISM data, which is the manufacturing data. So the ISM data, similar to PMI, which is the Purchasing Manager Index, is basically an index between 0 to 100. 0 means everything is terrible, we're at the recession. 100 means things are amazing, economy is booming. So the number came out, it is declining. It came out at 57%. So it's kind of underwhelming, but hey, it's still above the 50% mark, so it still shows that, hey, economy might be slowing down, but economy overall is very strong because we're at that 57 and above the 50% mark. So another thing to look at, all of these information that we received today kind of validate the thesis that I had, that we're at the late stage business cycle. So businesses is still expanding, GDPs is still expanding, but we're at the later stage in the business cycle. And we know what sectors do very well when we get to the late stage business cycle, because we talked about it last week. If you didn't watch last week's video, there's going to be a link somewhere here, so make sure to watch that as well. Lots of good information in there. Let's go. In terms of geopolitical situation, still lots of unrest. Unfortunately, Ukraine and Russia war still going on. China thinking about getting involved. So many uncertainties. So all it is getting priced into the market as we speak. Of course, our thoughts and prayers are with anybody who's impacted in this war. Yield inversion, big deal or no big deal? As of today, as of right now, as we're recording this, I still believe it's not a big deal. Why? Yield website and see what the hell's going on. So it is true that the 3 and 10 has already inverted, which is kind of a bad news, but the 2 and 10 are still not inverted, and more importantly, the 1 and 10 are still not inverted. So with the job numbers that we got today, with the ISM numbers that we got today, I think this yield curve inversion is still not a big deal. And that's exactly what Fed is doing. They're saying, don't worry about the yield curve. Economy is strong. We can hike the rates fast and it wouldn't cause a recession. Do we trust Fed at this moment? We don't know, yet to be seen. All we can do as traders is look at data and come up with our own conclusion. I wouldn't read too much into it yet. I think there's still potential for outperformance in equities and in the stocks. And now let's go to our market, overall market, what's going on. Let's go to our trading terminal. If you haven't checked our trading terminal, it's a tool made by traders for traders, so definitely check that out. So let's go ahead and see what's going on in the market. Overall, today was an interesting day. It's a clear indecisive day. We had 2 down days, and today market is kind of starting to price all these new information day. We started the day pretty weak, sold off, rallied back, but now still selling back. Overall, a lot of weakness, especially in technology. We saw VIX is going down, which is good news, but again, you have to pay a little bit more attention to what else is also going on. In terms of sectors, for the week, real estate is very strong, which is again shocking, but yet to be seen. Utilities are strong, staples are strong, healthcare is strong. We talked about these three sectors usually do better in a late stage business cycle. And of course, financials are doing the worst, and there is no surprise here either, because we know as the yield inverse, that's terrible for banks because they borrow at the short term, lend at the long term, and their margins start to collapse. So financials not doing so good, more defensive stocks doing better. So not a lot of surprises in terms of what's going on in the market. Let's go ahead and look at some of the indices. So look at SPY. I mean, we had a nice rally, and then a couple of days down, and then today is another day down. What I think is going to happen over the next week is we're going to see a smaller candlestick, a little bit more indecision, and then we're going to decide if we want to go higher or we want to go lower. This week is going to be about volatility expansion. That's the theme of this video. If you take something away, I think next week or maybe the week after is all going to be about volatility. Let's go to NASDAQ and see what NASDAQ's doing. So let me erase all this. Same story again in NASDAQ, a little bit more aggressive, but same story. We had a huge rally up, 3 days now in a row. I think we're probably going to consolidate around here, around this 350 mark, and then decide if we want to go higher or lower. Again, one thing to keep in mind is volatility, the volume is going down, volatility is going down, but next week might be a week where volatility expands. Speaking of volatility, let's actually go to the volatility index and see what's going on there, to a midterm volatility index. We had a sell-off, volatility went up, and we had a rally, volatility went down. Again, if one thing, I think there's still too much uncertainty. So this week that is coming might be a really good week to go long volatility again if you're an option player. If you were shorting volatility this week, you made a lot of money, congratulations. But I think the environment is going to change going into next week. So let me go delete this, and let's talk about our trades for this week. The theme of the week for our trades going into next week is volatility, 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 volatility expansion to be exact. So I have 3 trades currently at the moment going into next week. As next week unfolds and we kind of decide on what direction we want to go, there's going to be more trades. If you're interested to know about them, definitely think about joining our chat room. But I'm straddle on Tesla, straddle on mRNA. Both of these expiry is April 14, and betting on high yield expansion. So as Fed will increase the rates, that will make borrowing harder for a lot of companies, and that would cause a spread to widen, especially in a high yield junk bond. So I'm kind of betting that HYG will go down. These are the 3 trades that I have. So let's go to our interactive broker and see exactly what's our reasoning for these trades. When we look at Tesla, Tesla is historically a very volatile stock. You can see average annual volatility of 60 or 70%. Volatility usually goes up at about 60%, but volatility has been imploding. If I can bet on one thing, is we're going to see reversion to the mean and volatility will increase. Same story, and this was for Tesla. Same story in my opinion for mRNA. So let's take a look at mRNA. Again, historically a very volatile stock, now volatility at almost all-time low, really low. If you know one thing is reversion to the mean. If volatility is going down, we are going to see some kind of a reversion back to the mean and some kind of an uptick in volatility. We don't want to bet on direction here. All we're betting is expansion of volatility. And then lastly, the last trade that I have, and I told you as the situation gets harder, we are going to see HYG, which is the junk bond index, to go lower. This is one of the bets that I have going into next week. So probably HYG will move lower. So that's the theme for our week. What do you think? What are some of the trades that you're setting up? Again, if you're not part of our chat room, definitely feel free to check that out. If you like this type of videos, this type of information about the macro environment, make sure to subscribe and hit on the notification. And if you got questions, feel free to email me at rd@bearbulletraders.com. And if you want real-time analysis of my trades, feel free to check out my Twitter. That's where I usually play around with my ideas and with my kind of theses and kind of interact with everyone. So feel free to check me out on Twitter as well, or shoot me an email at rd@bearbulletraders.com. Again, on the Twitter side, so let me actually go ahead and show you. Again, on my Twitter, this is usually where I come up with a lot of my ideas, what I see in the market, bouncing off ideas, looking at Google Trends, things in that nature, and share my trades and my thinking. So definitely, if you're interested, make sure to follow me in there as well, and we can interact. Thank you so much, and see you next week. Enjoy your weekend.